Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, November 10th, and it's about 11 a.m. on the West Coast. And today is a beautiful day, not only weather-wise here locally, but in the mortgage rate markets, because we got CPI data this morning, and it came in even better than expected. Like we have been talking about, we expected to go down with this upcoming, with these numbers based on what was going on last year at the same time, but it actually dropped a little bit less. So, the headline, which the Fed doesn't really care about as much, went down from 8.2 to 7.7. The core, which the Fed really cares about, which strips out energy and food costs, went from 6.6 to 6.3. So that was a nice drop. And everywhere across the board, it really had really positive movement. The only place it didn't was in shelter. And like we talked about before, shelter is kind of a lagging indicator. So we really expect that to get better in the upcoming months. So that makes this whole report even better than it came across at the beginning. And really the thing that's driving up the most, or also even better than it was this crazy lodging away from home print. And all this information comes from MBS Highway. They're really good about tracking all this stuff, and these things come from them. So let's go to lodging away from home. So lodging away from home is exactly what it sounds like. It's people staying in motels, hotels. It actually, I think it has dorms in there too, kind of tracks it. So as you can see, this is something that over the years just varies from month to month very wildly. So down in 2020, obviously during the pandemic, it was really low. During the recession, it was kind of pretty low, kind of stable, but you kind of swings. And right now it's really high. So that itself is one thing that was really inflating those numbers, or we might have been even a tenth lower than we were, and today would have been better. And when I say it's gotten better, last week, mortgage rates across the country, according to that lender survey, peaked at about 7.30%, according to that survey. And today they're at 6.67. So we lost, we had already got a little bit of positive movement going into this report. And then today we've lost about 0.60 or actually over half a point today. We lost in mortgage rates, which is awesome news. So we've looked at this chart before, but just to give you an idea again, now we've got these numbers. This is what we have right here. So it's this, right here, 0.3. So we're right here right now at the very end of this chart. 0.6, it's replacing this number from last October. And like we have been talking about these last few months, the reasons inflation got so bad was these numbers right here last summer were really low, and they got replaced by these higher numbers right here. And as we've talked about before, and over and over again, the bond markets and mortgage rates hate inflation. So we need to get that under control. So now that we're past this point from last year, the 0.6, as you can see, we have pretty elevated numbers the next few months. So we really expect this to come down even more. So when we get the November numbers, if it's 0.3, then it's going to come down 0.2 overall, and so forth. So it's really trending in a positive direction. And from this point on, we can maybe expect maybe early next year to get down back into the maybe mid fives, maybe even low fives, if things go well, if it stays on the track that it's on. So with inflation coming down, that's all positive. Generally the spread between the 10-year Treasury and mortgage rates is about 175 bips or 1.75%. Right now, the U.S. Treasury is at about 3.85 after today's nice movement. So really, that's about 5.6. So, if things stabilize like we expect, and even if it kind of stayed where it's at, that's mid fives in a normal market. And, with buy downs in a buyer's market, if things continue to shift that way, maybe they can get down, with a 4 in front of it, which, obviously a lot of first-time home buyers and people in the market would love to see compared to the 7s they've been seeing recently. So this is all awesome news. It's really great to see things go as expected because, although it was expected, we all were also thrown for a loop, with the August numbers where they were expected to come down, and they did not. And that really, put us on the trend, this upward trends that we've been on the last few months. So great news to see that, that came down. It looks like inflation's getting under control. We also got job numbers today that are in, it looks like continuing claims for unemployment have gone up, which again, not good for our overall economy, but adds some pressure to the Fed to maybe back off some of their increases going forward and to moderate a little bit. With inflation coming down and job losses going up, they're going to want to not, obviously they don't want to send the whole country into a recession. So fingers crossed that they don't. So if anybody needs anything at all, please do not hesitate to reach out. Besides that, I wanted to wish everybody a happy Veterans Day, especially our veterans and their families. Thank you for all you do for our country, and I hope everybody has a great day.